The important thing to understand about the difference between operating and non-operating departments is one makes money, the other does not make money. So food and beverage profit is calculated by taking the total of all food and beverage and related food and beverage sales and subtracting the cost of goods, the food cost, the beverage cost, and then the food and beverage payroll, including benefits and the food and beverage expenses. But typically, in a good hotel and a good operation, we should be looking at somewhere between 20 and 40% food and beverage profit. GOI stands for gross operating income, and it's a really important number. And a good GOI number in a hotel should be well north of 60%. The non-operating departments, or the overhead departments as they're referred to by some people, are A&G, sales and marketing, maintenance and energy, and they do not make any money. They do not generate any revenue. The gross operating profit is what's commonly referred to as the manager's number, because everything above the gross operating profit line are the items that the manager controls, all the operating and all the non-operating departments. So a good GOP in a hotel in North America last year, the average was 37%. And net operating profit is simply gross operating profit, GOP, less the hotel management fees. EBITDA is an acronym, and it stands for earnings before interest, tax, depreciation, and amortization. EBITDA is calculated by taking GOP and subtracting the management fees and items we typically call occupancy expenses, items like insurance and property taxes. It is an expression of cash flow before income taxes and interest payments. EBITDA is commonly referred to as the owner's number. GOP, on the other hand, is the manager's number, and EBITDA is the owner's number. And NOI is the very last thing you will find on a financial statement.